All right. So, welcome to Intro to Risk Management. It's funny because this is the one that people think that they don't need, but they need the most. Trader Bay method is what I love to call everything that I'm teaching because it's the Trader Bay way. That was lit. That just flowed, y'all. That was lit. The Trader Bay way. So, anyways, Bay, if you don't know, is a play on my last name, which is Bailey, Bailey. So that's where that comes from. But when we're trading options and futures, we definitely need to have some risk management things put together. We need to know where we should place our stop losses. You guys should know about OCO, where that's an order that you put in where one cancels the other. So, like, let's say you got into a put, you would purchase a OCO, well, not purchase, but you will put in an OCO order when you're starting your put for your options so that when it gets to that particular price, it like cancels it out for you and makes sure that it locks in the profit. And it's really cool. It's really, really cool that all these different things are out there. They kind of make it hard for people to fail if you think about it. When we start failing in the market, and when I say they, I say like prop firms, what you call it? Brokerages. Brokerages have risk management tools where if you lose a certain amount, it locks your account. Like I'm with Top Step right now, and Top Step has a lockout feature to stop you from over trading. And it's funny because Mo, Shy, Bridget, and my other baby, I got y'all, okay? And hello, King God. Hello, hello, hello. Oh, hello, A. Um, it's funny because a lot of people swear that what is it, like prop firms are against them, brokerages are against them. But at the end of the day, if you use the risk management tools like the lockout in case you're over trading or setting up that I can only lose this much per day, you change your life. So I want you to look at this. Look at risk management like this. Let's just say that you have a tight stop loss of about $30 when you get into your positions on your options, right? You're willing to give away $30 a day. Let's say you're only willing to give away $10 a day. Okay? This will make you hyper focus on A plus setup so that when you get into your trade, you've caught it at the perfect spot that now you've caught the momentum to where you are 100% in profit within 15 minutes. And if there is a drawdown on IWM or if we pull back just a little bit, now you didn't lose that much because now you're at 50% profit and you waiting for that next, drop, or let's say you got into a call and it pulled us back down just a little bit and it's going to pop us back up. If you get in and you time your stuff just right and you utilize your risk management tools that these brokerages and prop firms give you, I promise you, you're only going to pay a couple of those tight stop losses. You're only going to pay a couple. Once you master your craft and you know exactly like what you're playing, like I only play failed twos or I only play what is it? A Nirvana, a 1-3 on the strat, like a inside candle, like a small candle on the daily, and then that big candle that pops out on the daily. Or I only do this, or I only play reversals, or I wait till the dust settles in the morning and I take my position at 10:30, when the market is pivoting and going in a different direction. And when you master that part, I'm telling you, it's all one locomotion. So you know what your setup is. You only plan on your setup. You got that tight stop loss. You enter at the optimal entry, like perfect entry. And those do exist. You will be able to have like top tier risk management. It won't hurt you that much. Literally, you'll probably never lose anything. I'll be real with you. Like if you do have a losing day, so let's say there's 5 days out of the week, 4 days, you'll make bank, you'll do amazing. Fifth day, you may hit your stop loss of $30. But if on them 4 days you made 500, but if on this last day we reversed and the trade went to I don't know what and you lost 30, like, you see what I'm saying? You had a green week. Your entire week was green because you made 4 times the amount or probably 100 times the amount than what you lost on that one day with your risk management. So now that I gave you all of that on that little intro, let's get into it. Let's see what they're talking about. Why risk management matters. 90% of traders lose not from bad entries, but bad exits and lack of self control. Risk management keeps you in the game long enough to get consistent. This is true. Preserve capital is over chasing profits. Now, whatever ticker that you trade, this is how you are going to get paid. I need you. This is y'all's homework tonight. The slides say something else for homework, but bump that, baby. This is your homework. Okay? Whatever ticker you like to trade, whether it is SPY, SPX, or whatever the case is, I want you to, as a matter of fact, I'm finna go on Trading View right now and I'm finna take a look because I need to see what I'm trying to say. Because, and definitely do this on options. Do this on options because options ain't moving right now, okay? I want you to go to SPX or let's do QQQ, okay? Mouth pop. I want I want you to go to like the 5 minute. Yeah, 5 minute is a perfect time. I want you to go back, not today. Today we just dropped the hell. Like that has nothing and not profanity hell, but literally hell. Go back to let me see. What is this, November 4th? Do we do? Nah, we was dropping there too. Girl, bye. Well, we've been dropping for days. Hold on. What's going on? All right, hold on. Let me see. I'm looking for a good day. As a matter of fact, I'm gonna give you the ticker. All right, yeah, Q the 28th. Yeah, that was a decent day on the 28th. Nah, that was a perfect day. We don't want a perfect day. We want like a midday. Hold on, I got y'all. I know you're like, Danny, come on. Well, you can't do nothing if you ain't got homework. Boom, found it. We're gonna do October 23rd. October 23rd gave downside movement and it gave upside movement. Sure did. It made the total V, the total package right there. Now, what I want you to do on the downside movement is I want you to measure the magnitude. So when you look at October the 22nd, yeah, October the 22nd on QQQ, I want you to look at the magnitude of your drops or how far back we can draw. So we dropped coming into the market and then we pulled back up. And I'm going to take a look at it my darn self. So give me 1 second. I want to say, what is this? 608, maybe like 608.75. And then we pulled all the way back up to 611 and maybe 40 cents. Wow, that was a $3 pullback. God darn. Okay, so you see that. When you know that your ticker that you're trading, and again, this is October 24th for QQQ is your homework. When you know how much your ticker pulls back,
They're
you can
actually
stay
black woman owned.
in your
Really?
position.
Yeah. And you can do.
Okay. You can stay in your position a little bit longer and not get wicked out like everybody else does, or like you have been. You've probably been wicked out before, right? Because you don't know when you should be exiting. You know that your risk management is tighter, maybe that you have a stop loss of 20 or whatever the case is. So guess what? The stop loss puts you negative 40. Okay, because you're like, oh, my stop loss for any option that I trade, whether it's Tesla, whether it's Apple, whether it's Google, Amazon, Meta, whether it's QQQ Spy or SPX, I'm only willing to give up $20. And that's fine that you said that, right? But then you get on a ticker where her typical drawdowns are going to put you out $35. So you hit your 20, you exit, you're like, God darn, man, I hit my, and then you look and you see it goes back in the intended direction. You like, got to be more careful. I should have stayed in that play. That's because you really don't know that ticker. You're playing that ticker because maybe someone else suggested it to you or whatever the case is, or someone else saw a setup, but you don't know how far you need to sit in that drawdown before you see something go good. So, for example, a lot of people found me online on Twitter where I was, talking about the $2,000 I had made in prop firm. Okay, great, 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 great. Would y'all believe me if I said I had played NQ and sat there and watched my screen say negative $1,000? Y'all wouldn't even know how to sit through that. Baby, you know what? I darn near didn't know how to sit through it. How about that? How about that? We both here. We both here like, and I said, you know what? I trust my analysis. I trust it. I trust it. And if I have to, I'll pay for another evaluation. I trust it. I trust it. I trust it. because I knew what needed to happen, but I also knew how far back my ticker pulled. And when she did drop, she dropped it like it was hot. So I'm not telling you guys to ever sit through $1,000 worth of drawdown. That's nuts, okay? And that's over on futures and that's on micros, okay? Or sorry, that's on minis. That's on the minis. But the micros is like $1.25. So instead of me being down 1,000, I probably would have been down like $100 or something like that, right? For that pullback or that drawdown as they call it. So what I'm saying all of this to say when you know your ticker and you trust your analysis and you know your setup, you become A1, like on top of your game. Like it is to the T. It's like perfect. I'm telling you. But when you don't have confidence and confluences in all of those areas, you are going to either get wicked out or you're going to, close your position and see, dang, this really went in my direction. So as a new trader, you do want to keep your stop losses to a minimum. And when your trade does go against you for some strange reason, right? Let's say you don't know how far back the drawdown is or whatever. You need to journal about that because your first week of trading QQQ, let's say your stop loss is 30 and she keeps pulling back 40. She pulled back, 40 and 50 cent and 40 and this and that. Journal about that for them 5 days. And then you'll start to see a pattern. You will start to see a pattern with your trades and you'll start to see a pattern with QQQ. Okay. So you want to preserve your capital over chasing profits. That's what you really want to do. You don't want to sit there and hold losers and cut winners. All right. So core concepts of risk. The percent of the account you're willing to lose per trade. There's a position risk where it's like the dollar or tick amount you're willing to lose. There's leverage risk where margin amplifies both gain and losses, and there's emotional risk. Tilt, FOMO, and revenge trading. Tilt is crazy. I've done tilt before. Yo, that wasn't funny, but that was a laugh. That was a key. When you tilt, like you just be like, you know what, F it. Like what? Hey, throw your hands up, whatever. And that's not necessarily good. And so on a day where people tilt, coming from a psychologist to you, coming from a therapist to you, it's typically a day where we already had a bad day. Honestly, don't need to be trading. Don't even know why we on the charts. We out here looking like Boo Boo the Fool, really. And then you just get to the point where God darn, you stubbed your toe, you forgot your coffee, you didn't take your lunch, somebody pissed you off at work, somebody was on your social media that wasn't supposed to be. You locked the keys in the car, you decide to take a trade went wrong. You get to that trade, that'd be your 13th reason on that wrong trade. You're like, you know what? To HE double with everything and this trade on tilt. Let's go. I don't care what happens. I don't care. And truth be told, tomorrow you is gonna care. You is gonna care. Okay. But in in that moment, it's like I'm done. I'm done. FOMO, golly, when people go, oh snap, did you see that big candle that just printed? And then you get excited in your little Discord or your WAP or wherever you at. And you like, oh, I'm gonna get in. Baby, if you wasn't there for that initial pop candle, I want you to sit on your hands, please, or play the reversal of that. Because whenever we have those big drops or those like random, I'm saying random. Today was very calculated. We knew that the market was on some BS for about the last 48 hours. But I'm talking about a random drop. Wait and see if that drop is going to continue for 15 minutes or so. If it don't give you more than 15 minutes, baby, and it's trying to reverse, don't get in that play and then see yourself up 20% and then see yourself down the whole contract. Don't do that. The day when freaking what's this guy Jerome Rome was on the mic at the symposium, I will never forget this. I remember it like it was yesterday. They heard that man say mic check 1 2 1 2, and the candle went to the it took us to the king. And I wasn't in a play, so I was sitting there like, oh my god, oh my god. No. Everybody else who caught it, congratulations. Me, on the other hand, I knew not to get in because I knew by the time I got in, it was going to be a little bit interesting. And I speak from experience. I have been through that. So don't let FOMO get you and then revenge trading. Now, I'm going to tell you the truth and I'm going to be honest because what would I be if I wasn't candid with y'all? I've revenge traded on IWM and I'm going to tell you why. Because she's a slow one. I wanted to say something else, but this is going on the podcast show, and then this is also going on YouTube. But that ticker, y'all know how I be selling out on her. moved so freaking slow that one day I got into my put after she broke orb. I was up like $10, and then all of a sudden she wanted to skirt skirt and then go back to the top. I said, okay, bet. So when I got down $9, I hopped out, and because you know IWM, she moves slower than molasses. I got in immediately, got into a call immediately, and went back and made $15. Am I proud of this moment? Not necessarily. So I just want y'all to know that don't do as I do. It works out every now and again, but it might not work out that good. And the only ticker that you could possibly do that with is IWM. Now you could have an account risk. So let's say you got $500 in your brokerage, and you say my $500 brokerage, I'm only willing to give up $5 a day, or I'm only willing to give up $50 a day. Please choose one that makes more sense for you. But you can do a percentage risk, or you can do a position risk, like dollar or tick amount. And me, I do that. So I'll say, you know what, at $10. Now, what's funny about today, I saw the setup for QQQ. QQQ had me out of profit and had me at negative $11. I think it was $1 beyond my tick, and then dropped it like it was hot to the point where my contract was up 100% and I closed. But that's because I was that confident in my setup that I wasn't about to let QQQ trick me out my spot. It wasn't so much of me holding a loser as it was me knowing what the deal was. Okay. So sometimes you may have to give a little bit more than, it may go over by like if you got 10, it may be 11 or 12. But if you know that your setup is A1 and you see everything's working out in your favor, and the reversal is kind of like fake, or maybe people taking profit, etc., you're more than welcome to stay in and then get the most. Okay. So here's risk parameters by market. If you were trading SPX, you only want to risk 1 to 2%, or have a $100 to $300 stop. And think about theta. Theta is very, very important because SPX will put you out of profit immediately. And the moment that you're out of profit on options, theta kicks your behind. Okay. The moment that you're out of, okay. So if you're not green on your options trade and you sitting there holding that sucker, by the time it goes back to the point where you were green, you will no longer be green. I had that happen to me on NDX. I had never traded NDX before. I saw $25 worth of green. It took it back, and I stayed out of profit for 3 hours. By the time we got back to that price point, I was still down $50. I said, oh, the devil is a liar and a half. Okay. I said, never again. NDX, you don't need to see me. Not yet, not yet. That's rich people to the tease. Okay. So on futures, you have a 0.5 to 1% risk, or 20 to 40 ticks. Let's talk about this 20 to 40 ticks. When you're trading, especially in prop firms and different things like that, they should have an option called a trailing stop loss. If they don't have a trailing stop loss feature in their trades, you really don't want to trade with them. You need that. You need that, okay? And the reason why you need that is because what it does is the moment that you click trailing stop loss and it asks you how many ticks you want, and you put that 40 in, as your trade moves in the correct direction, it pulls your stop loss with it. So it locks in profit as it moves. And honestly, anybody who don't be offering that, I'm kind of side eyeing them, because that's a wonderful feature to have. Trailing stop loss is nice. So you want to have a trailing stop. This is for futures now. We don't have that on options, okay? And then over here it talks about the risk, and look how on NASDAQ they said we should do 20 to 40 ticks, but on ES it says we should do 10 to 20. That's the importance of you guys understanding the ticker that you're trading. On QQQ, you might have to stretch it a little bit more, have bigger tolerance, especially on SPX, have a bigger tolerance for the movement of your ticker versus like SPY or, ES. And for example, on any given day, NASDAQ will be up $100. And for our $100 that were up on NASDAQ, ES, which is the S&P 500, will be up 50. It's like half the amount. So you see what I'm saying? There's that half. All right, setting a daily loss limit is very important. You guys need to have a daily loss limit, okay? So once you hit your daily loss limit, you need to stop trading. Discipline protects your capital. That stops you from going on tilt. That stops you from revenge trading. So you need to know your account size. So right now in your brokerage, let's say you got $500. So they say 3%. Okay. So let's do 3% of the 500. Oh, Father God. Okay, no, I know how to do it. I just had a moment. Okay. That's $15. If you got 500 in your brokerage, your daily loss limit is 15. If you're on a ticker like SPX, you're going to lose more than 15 in the drawdown. So why are you over there? Why? Is it because you saw such and such and such and such and such and such trading it? Because if that's the reason, you need to get off of it. Understand? So y'all got to take into account your account size and the daily percent you're willing to risk. Okay, that makes all the difference. You want to stomp with big dogs with people who got buku money in ways we don't know how. Okay, we don't know where they got their money from. You know, they might be doing a little something, something on the side. You know, who knows? Who knows? And here you are with your $500 account trying to keep up with them. No, ma'am, no turkey, and no spam. Okay, and no sir, and no sir. You need to do it with your account size, and then get on a ticker that fits your account. So, who are friendly tickers for small accounts? TSLL, IWM, it's me sitting here like, who else? Come on, Dennis, you got somebody else. GLD Gold. She be moving, you know. She got contracts, you know. GLD. Now, out of SPY and QQQ, who would I suggest? Baby, QQQ. QQQ. Yeah, 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 yeah. So QQQ, IWM, GLD, and TSLL. Rock and roll with them. They'll allow you to be in your play and not hit that stop loss too quickly, okay? All right. So account times risk percent divided by stop loss should tell you your contract size. So if your account size is $500 and you only want to risk 3% of that, and then what is it divided by stop loss, that tells you how many contracts max you could get. Okay, avoid emotional oversizing. This is something I know that just confused y'all. I don't even use that formula. This is a formula that should be taught, but I don't use that one. That may be something that you may need to review again. Okay, you might have to come back to that slide. But with me, I just have a set number. I don't get into all of that razzle dazzle. A set number. Okay. So on the future side, tick values for ES is $12.50 a tick. NQ is $5 a tick. You see that? When you play ES and NQ, that's how much you get a tick. That's why people be racking in a thayao trading futures and 5,000 and 10,000 because you get so much per tick, and a tick is per cent. Like when we moving by the cent, like $120.11 and 12 cent and 13 cent, that's them ticks, you know? And so it is very good for you to use bracket orders for built-in protection, where it says a bracket order. I just, start using these as well, is that in the system, like Top Step and these prop firms or these brokerages, you can do it where it automatically does a stop loss for you. And what is it? It's like it automatically sets your stop loss and something else. Oh my goodness. I might have to pull it up on my phone, and I got to tell y'all exactly what it says because I can't be out here just, not knowing. But my brain is firing off in 501 ways. So y'all got to work with me. Okay. I'm teaching. Here's my bracket. So so in the bracket right here on my phone, it says position brackets automatically aggregate your take profit and stop loss limit at the same price functioning as a single bracket. Multiple entry and exits are not supported on position brackets. So you can only do one entry. But basically, I told them I'm willing to risk $25 and I'm willing to gain $100. That's my bracket. So as soon as I enter into my trade with this bracket order, my stop loss is for $25 less than that. And then boom, my profit is for $100 more than that. Okay. Wherever I enter into the trade. So that's what a bracket order is. And again, that comes with, the side of futures and prop firms or brokerages. On the option side, you got to make sure that you pay attention to Delta, Theta, and Vega. If you are not in the intro to options class, make sure that you view that or go listen to the podcast because we talk about Delta, Theta, and Vega. I will not go into extent in it over here. But you got to know what those are because that helps with your risk management as well. Never risk more than you're never risk more than you're okay losing completely. And that's true. When I enter into my trades, I don't want to think that my $30 contract that I just bought for QQQ, I'm going to lose the whole thing. But the moment that I enter my trade, I detach from my trade. And I tell myself, it's funny, if you ever hear me live trading or talking with Bugsy or whatever the case is, I'll be like, you know, Bugs, this is how much I would spend if I went to TJ Maxx, or this is how much I would spend if I got ordered out pizza. So basically, I'm just risking pizza this week. And it totally puts things in perspective for you, right? So, like, that's very, very important. Like, never risk more than what you're okay with, you're like to lose, willing to lose. But then sometimes look at what you're risking, quote unquote, or look at what you're putting forward on your contract and just make a kind of sense of it. Like, you know what? This is basically my subscription for Netflix and Hulu put together. I'll be all right. I can get this back. I'll be okay. Okay. And then it says avoid scaling into losers. Time decay is not your friend. Time continuity is your friend on that statement. I need you guys to stop being down on the goddamn 1 minute and the 5 minutes, seeing a melt and saying, ooh, it's time to get into a put. Absolutely not. I need you when you're in a trade to go to the highest time frame, the daily. Drop it from the daily, go to the 12 hour. If you can't click through this fast, baby, I need you to get skilled with it. Time yourself over the weekend. That's your homework. Time yourself clicking through time frames. How about that? And be able to do it within 10 seconds time. Look at the daily, look at the 12 hour, look at the 6 hour, look at the 4 hour, look at the 1 hour, look at the 30 minutes and the 15 minute. Then you can go to the five and decide, okay, boom, yep, puts. Because if the daily time frame is not really giving that, and then I look at the 12 hour, it's green. The daily is green. The 6 hour, green. Four, green. 1 hour, green. 30 minute, it's a green candle. But then when I get to the 15 minute, it's red. Why am I getting no, no, no? Or better yet, even the 15 minute candle is green and you down on the 1 minute talking about, ooh, a melt. Child, please. Okay, play with it if you want to. Stop scaling into losers. Use time frame continuity and actually have a trade plan. Don't follow what nobody else is saying. Stop looking at the timeline while you're trading. Have a plan for that ticker. When this ticker hits this, I'm doing that. And when that ticker hits that, I'm doing this. And I ain't doing no more or no less. I don't care what Danny say. I don't care what Joe Blow Schmo say. I don't care what Pookie and them say. Peanut and them. Nobody. I'm doing this with this ticker. Know that before you get on your ticker. And then you'll stop scaling into losers, following behind other people who's like, well, I'm up 200% on SPY. Okay. And then you go over there and now you down 200% on SPY. And how you down 200%? Okay. Okay. Anyways, so it's funny combining both. I trade both futures and options. Futures has directional confirmation, options has defined risk and flexibility. But when you're combining the two and the skills of the two, you have smarter hedging and better balance. So a lot of people are trying to figure out how they could trade both futures and options, and it's fun here. It's very much so fun here because now you're making money both ways. And hopefully, anybody that's a part of Risk to Riches and anybody that's a part of the WAP coming across my podcast or my YouTube channel or my TikTok or my Twitter learns the value in knowing how to trade both so that you can make money two ways. Imagine smacking the market two times in a day at the same time. Exactly. All right. So, emotional risk and reset rituals. You guys need to be journaling. So, you can start a YouTube channel and make it private if you want to. You could start your own Discord and make it private if you want to. You could journal in a regular book with a pen and paper, or you could just record a voice memo. But you need to start reviewing your trades. You have to do that. You need to review your trades. You need to start taking 15-minute breaks and meditate after you have stressful trades. Get up from the computer because the goal isn't to avoid losses, is to lose correctly. Prop firm evaluation tips. You want to make sure that you respect their trawling, their trailing drawdown. Okay. And that's whatever they tell you, that's how much you could risk. Then baby, be very careful. And that's all you can risk. Okay. You can't tell them people to change their stop loss for you. Stop trading after plus $1,000 a day. Okay. So if you have over a $1,000 day, just chill because I promise you, when it all goes to your head, all of a sudden now you're down 5,000 and you're like, what in the world happened here? So after $1,000 day, step away. After a $200 loss on futures for prop firm or for options with Vanquish, Again, step away. When you're down two, step away, step away, step away. Okay. So here we go. Review and recap. Risk equals survival and not restriction. Track your metrics, your R&R, your max loss, and your position size. And then Trader Bay motto: risk first and profit second. So that's everything for tonight's class. Now I got about 3 minutes to put y'all. Wait, 3 minutes. Yep, to put you guys on game on how I manage my risk. First off, one of the things that help me with managing risk is not trading when I'm stressed out. If I'm trading when I'm stressed out and for the bills, my risk management is already messed up. You guys need to stop trading with pressure and weight on your shoulders. You need to start trading comfortable and as a like a hobby, like something on the side, like something that's fun. Okay? So I'm words from me to you. Stop trading with the weight of the world on your shoulders. Like, oh, I gotta get this for my car payment. No. Because the moment that you say you got to get it for your car payment, you're going to lose three times that amount. Don't do that. Okay. Another great risk is to make sure that, like I said, study your ticker. Find you a ticker and see on a good day, not a melt day and not a rally day, not when we drop the hell or when we take it to the king, but on a day where we have that higher high, higher low, or that trend that you can see, etc. You need to see how many ticks, how many cents, how many dollars that particular ticker moves so that when it's breathing, so to speak, like you're in a call, right? And we go up and then it draws down, that's natural. That is called a higher high and then a higher low. Then you make another higher high and another higher low. That's natural. You need to know what the common, like, little area is for that. If that's like, $10, $5, $4, so that you don't psych yourself out your trade. Okay. So that helped me a lot too. And what's another thing that I could give you guys before I check the chat? Risk management. Utilize those features when you start doing your prop firm evals. When they give you trailing stops and brackets and the OCO on options, when you're entering into your trades, you can do the OCO orders and stuff like that. Please utilize these features and these options. They are there. This is why people be looking at us crazy as new traders. When we were like, I lost $5,000. They be like, now, how you lost 5,000? Y'all exit liquidity. That's it. Yeah, bring the retail traders that don't know how to trade it right on up in here. Yeah, bring them and their money. Cause then how you lost that and you got stop loss features and all like that. You got trailing stops and stuff. How you do that? So don't be the laughing stock of the trading community. Trade smart, okay? Trade very, very smart and try not to get wicked out your position. All right. And that's literally everything I have. But what I am going to do real quick is I got to get my anxiety under control. We're going to talk about that in a trading boot camp. I would have been sweating bullets, baby, me too. Can you share your chart? Dang, King God. I wish I could have, but I don't mind. I like sharing it over in Discord. Okay. So I just want you to know that, like, if there's something you wanted me to show you, hit me up on DM either in Discord or Twitter, and I'll take a screenshot and show you exactly what I was talking about. Okay. But that's everything for tonight. There is no homework to my ladies. I am going to get everything squared away. You guys DM me immediately on WAP or Discord, okay? DM me immediately. And thank you guys so much for attending tonight. And I will talk to you guys soon. Thank you, Jada. Bye, guys. Bye, Riri. Riri, I'm sorry. That's your daughter's page. All right.